Hi everybody, in our last tuition session, we have started the chapter variance analysis and we have completed all the material variances and labor variances. In this video we will try to proceed with the explanation related to all the sales variances. Remember that in all the formulae for both material and labor variances, we were always taking standard figures minus actual figures. Material and labor variances are considered as cost variances. Now let us consider another variance called the sales variance. The sales total variance is subdivided between firstly, the sales price variance, and secondly, the sales volume variance. The sales variance is a revenue variance, which is the contrary of cost variances. This is why as from now, when using the formulae related to sales variance, we will consider actual figures minus standard figures. In the previous session, for material and labor variances, we were taking standard figures minus actual figures. Example, SP minus AP. Now, we will do the contrary. Please read the slide which follows carefully, and try to understand when a revenue variance is favorable or adverse. The sales price variance is the difference between the actual selling price and the standard selling price, multiplied by the actual sales volume. Therefore we can say that sales price variance, SPV, is equal to AP minus SP, multiplied by AQ. The sales volume variance is the difference between the actual sales volume and the standard sales volume, multiplied by the standard selling price. Therefore, the sales volume variance, SVV, is equal to AQ minus SQ, multiplied by SP. The sales total variance is the difference between the actual revenue and the standard revenue. Actual revenue is AQ multiplied by AP. Standard revenue is SQ multiplied by SP. Or simply, you can add the sales price variance to the sales volume variance in order to obtain the sales total variance.
Now, please refer to illustration 2, found in your photocopies on variance analysis, which Mr. Deller has given you before confinement, in the last session that you had together.
The budgeted sales for a product, called Jet Boss, was 2,000 units, at a selling price of $24. The actual sales were 2,300 Jet Boss, at a total revenue of $52,900. Calculate the sales price variance, the sales volume variance, and the sales total variance.
Please note that, for sales variances, Q is equal to units, and P is equal to X dollar per unit.
You will understand that, in this illustration, a Q is equal to 2,300 units. A P is $52,900, divided by 2,300 units, in order to get the actual selling price per unit. That is, X dollar per unit. Then, SQ is equal to 2,000 units. And SP is $24 per unit. Now, use all these information to calculate the variances found in the following slides. Please copy the above answers, together with the relevant workings, in your handout on variance analysis.
Thank you for your attention. This video has been created by Mr. Deller for Spatl Accounting Zone.